Today we're going to explain the IAS 23, and IAS 23 is self-constructed asset or interest capitalization. And actually here we are talking about the cost of borrowing. The cost of borrowing. What is the cost of borrowing? Cost of borrowing is whenever we have an asset that will be constructed through loan. Type how to find out how much of that interest of that loan to be added to the cost of the property, plant and equipment, or the long-term asset. يعني, for example, if we are talking about self-constructed asset, يعني asset that will be constructed by the company itself. Type what are the main costs to be included for that asset? Material, of course, labor, overhead, okay, and actually all other costs to be incurred during the. يبقى actually we are concentrating on the interest cost during construction. Type we have three approaches. The first one, no interest to be capitalized. What do you mean by capitalized? Capitalized means that it will be added to the cost of the building, the cost of the machine, the cost of the constructed asset. The other extreme saying that all interest to be paid will be capitalized. One extreme telling me no interest to be capitalized at all, and the other extreme telling me all the interest must be capitalized. طبعا احنا we are going to stick with what have been stated by the IFRS and the IAS, that we are going to capitalize the actual cost incurred during construction with modification, which means we have condition. Part of the interest will be capitalized, the other part will be expensed, خلاص, and our duty or our responsibility or our objective in that chapter is to find out, okay, how much will be capitalized. Okay, type. Very good. First of all, we are going to find out what are the main considerations that we have to take in order to capitalize the interest. First of all, he said that we have to have a qualifying assets. We have to determine the capitalization period, and then we have to find out how much to be capitalized. Right, let's go for every one of the conditions into detail. The first one is the qualifying asset. What is qualifying asset? Type. In order to say that this is a qualifying asset, it requires a substantial period of time to get them ready for their intended use. يعني الاسset must take specific period or longer period of time in order to be ready for use. يعني for example, we are talking here about assets that under construction for company own use. يعني maybe I'm constructing an asset to be used in my own operation, or maybe assets intended for sale or lease that are constructed or produced as discrete project, or maybe I'm constructing that in order to resell it once again. And both types of assets are taking time in order to be constructed, in order to be ready for use. In that case, this will be considered as qualifying asset. Whenever it takes a time, okay, in order to be constructed, in order to be ready for use, in this case, I will consider it as qualifying. This was the first condition. Type. What about the next condition, the second one, which is the capitalization period? When to start and when to stop capitalization. Type. Okay, we have to begin whenever the expenditure for asset have been made. يعني once you start to expense money upon the construction, this is the beginning date. Type. Whenever the activities for readying the asset are in progress, and as long as you are moving, constructing, this will be considered among within the period. And then interest cost being incurred. يعني احنا we are paying money for construction, and the construction is in process, and we are paying interest. If we have these three خلاص items, then this is the beginning of the capitalization period. And when it ends, when the asset is complete and ready to use. يعني whenever you finish the asset, خلاص the period for capitalization will end. The third condition is related to the third condition is to find out the amount to capitalize. How much should we consider of the interest as an addition to the cost? فاحنا we said that in order to capitalize, we are going to select the lower of, the less of, the actual interest cost. يبقى this is the first item that will be calculated. The second, which is the avoidable interest. The avoidable interest. يبقى we have to calculate two main amounts, the actual interest and the avoidable interest. Actual interest is the actual interest to be paid. The avoidable interest is the amount of interest that could have been avoided if expenditure for asset have not been made. This is the interest that you could avoid if you didn't make that loan or expenditure on the asset. Type, very good. Type, let's get an example, numerical example, in order to find out what do you mean by the amount to capitalize. Type, actually this is a practical question saying that a blue corporation borrowed 200,000 at 12% interest from a state bank on January 1, 2011 for specific purposes of constructing special purpose equipment to be used in its operation. Construction on the equipment began on January 1st, 2011, and the following expenditures were made prior to project's completion on December 31, 2011. These are the actual expenditures that have been made. The company paid on January 1st 100,000, April 31 50, November 300, December 100, total expenditure 650, and we have the company has another general debt existing on January 1st 2011, 500,000 14% 10 years bond payable, and the 300,000 10% 5-year notes payable. Type. Actually, this is the example that we are going to apply the three conditions on it. The first condition to be explained is to determine whether the assets qualified for capitalization or not. طيب احنا قلنا the main condition is to require a period of time to get ready, and it will be used in company operation. طيب, and it is starting on January 1st and ending on December 31st. He said here we made prior to the project completion on December 31. It takes me 1 year in order to construct the building, so actually, or the equipment. So actually here it is qualified asset. The first step have been met. The second step, to find out the capitalization period. We said in Nihna we will start whenever we pay interest, whenever we start the expenditure, whenever the construction in process, and it will end when the asset is ready for use. As we saw in the previous slide, it will start on January 1st, 2011, and it will end on December 31, 2011, because expenditure are being made and interest are being incurred during this period while construction is taking place. Actually, again, this is the main condition, second condition. Type. What about the third condition? Third condition is the practical part that need calculation, need some calculation. Type. Let's see how can we do that. Actually, we will do it through, I will calculate first something I call the weighted average accumulated expenditure. Weighted average accumulated expenditure. This is the average for whatever I paid during the life of construction or during the period of construction. Type. What was the first payments that have been made by the company? He started here by a payment on January 1st 2011 for 100,000. And actually we finished the project on December 31st. يعني actually this payment has stayed for 12 months. يبقى in order to get the weighted average, I will go here, taking the 100,000 as you can see here, and I will multiply it by the weighted average time, which is 12 over 12, because I paid that and it stayed with me for one whole year. One whole year. يبقى here I'm going to weight all the amounts according to the period واخد بال حضرتك remaining in the period of construction. Okay? طيب. So now we have an actual expenditure 650, but its weighted average accumulated expenditure is 250. طيب. Then I will move to the calculation of actual and avoidable interest. Okay, طيب. Let's skip that slide and I will go back for it. طيب, I have the actual interest and the avoidable interest. The actual interest is including all the debts that have been taken by the company. How many loans do we have? We have 3. The 200,000 here and the 2 other loans خلاص have been taken by the company. فأنا I will calculate the cost for both, for the 3 of them. But I will differentiate. I will say specific debt 200,000. The interest was 12%, the given. يبقى 200,000 multiplied by 12%, it is 24,000. 24,000. Okay, طيب. And the general debt, we have 2 other debt. The first one, 500,000, was 14%, which is 70. And the 300,000 by 10%, which is 30. يبقى the actual cost here is the total of all of the 3 numbers here. This is 124,000. 124,000. This is the actual interest. This is the first to be done. This is the first to be. In order بقى يبقى the first was to calculate in the actual cost or the actual interest. طيب. The second is the avoidable interest. طيب. What was the average, the weighted average accumulated expenditure? It was 250, as you can see here. 250. And we would like to know from where we are going to finance the 250,000. فاحنا we are going to say we got a specific debt for 200,000. طيب فيبقى 200,000 multiplied 12%, it is 24,000. طب what about the other 50,000? From where shall we finance it? فاحنا we are going to finance it from the other 2 general debt. But which interest shall we بقى use? ال 14% or the 10%? فاحنا we said we have to get an average interest rate. فأنا I got the 70 plus the 30, which is the 100. This is the interest to be paid by both of the general debt. And I got the total of the general debt, which is 800. When I divided the 100 over the 800, so the average interest rate is 12%, 500. Never to get the 14 plus the 10 and then divided by by 2. No, you have to get a weighted average. So weighted average must be taken through we divide the total interest over the total general debt. So actually here we have to find out the weighted average interest. طيب يبقى the other 50,000 will be treated according to the average interest, which is 12,500, the one that we got from here. So we have now 6,250. 24 with 6,250, we have 30,250. I have now 2 numbers. 124,000, this is the actual interest. And we have the avoidable, which is 30,250. And the rule is telling me that we are taking the lower one. The one that will be taken from here is the 30,250. طيب يبقى the amount that will be capitalized is the 30,250. طيب okay, we have to have an entry. We have to have an entry to record. We have the avoidable interest to 30,250 and the actual interest which is 124,000. We said capitalizing means we are going to add the amount of the interest into the equipment, into the cost of the equipment. I'm going to debit the equipment and I'm going to credit the interest expenses. I will decrease the interest expenses by 30,250 and I will add it to the equipment by 30,250, and this is the capitalization of less of the avoidable or the actual. The less here is the avoidable, so this is the amount I'm going to add it to the equipment and it will be taken out of the interest. Right. Now let's move to another example. Okay. On November 1, 2010, shall a company contracted P construction company to construct a building for 1,400,000 on a land costing 100,000, purchased from the contractor and included in the first payment. The amount of the land have been paid within the first payment. Shall made the following payment to the construction company during 2011, and this is the payments that have been made during the construction time. The first to be taken into consideration, is that a qualified asset? Yes, it is, because we started on January 1st and we ended on December 31st. What is the capitalization period? Capitalization period starts whenever we start to pay money on January 1st, and it will end whenever the asset is ready to be used, which is December 31. Actually, the first two steps have been fulfilled. Type. Another information have been given. P Construction completed the building ready for occupancy on December 31, 2011. And they had the following debt outstanding at December 31. This is the specific construction debt, 15%, 750. And we have two other debts, 550 with 10% and 600 with 12%. And he asked me to compute the weighted average accumulated expenditure. So actually I can get here and get the 210,000, okay, and it lasts for 12 months. 210,000 will be multiplied by 12 over 12, which is 210,000. Type March 2 months only have passed. 300 multiplied by 10 over 12. Type May 8 over 12. December, because it is December, it didn't last with us for any of the period, it is 0. The weighted average accumulated expenditure is 820,000. 820,000 as weighted average accumulated expenditure. Then we will go to find out the actual expenditure or the actual interest and the avoidable interest type. If we are looking here, you will find that in order to explain or to find out the actual interest, I got the 3 debt as you can see here. And actually, I got it from the question, because actually here we have 750 with 15%, 550 with 10%, and 600 with 12%. So here I'm going to multiply the interest by the amount of the loan, and the actual interest is 236,500. 239,500. Okay, type. Let's go and do the avoidable. Type. The avoidable is telling me that I have a weighted average accumulated expenditure 820,000. Type. And we have a specific loan, if you remember, with 750, with 750. And the interest is 15%. So actually the interest will be 112,500. Type. From where are we going to finance the difference? We have to have the weighted average interest. طيب how to find out the weighted average interest? By getting the general two loans that we have. Okay, the general two loans that we have. لو انا اللي هم ال 550 by 10% وال 600 by 12%. Okay, طيب and I will calculate the interest for them. The weighted average. This is 55,000. This is 72,000, and the total is 127,000. From where did we get the 55,000? By multiplying the 5,500 by 10%. From where did we get the 72,000? Multiplying the 600 by the 12%. يبقى I have total interest 127 and total loan 1,150,000. يبقى weighted average. Okay, the weighted average interest is dividing the 127 by the 150. So the average interest is 11.04%. 11.04% as you can see here. Okay, so actually now I can go and finance the remaining 70,000 at 11.04, which yield in 7,728. The total avoidable became 120,280. 120,228. The avoidable cost is 120. Okay, and if I'm moving forward for the slides that we did, the actual interest is 239,500. And as usual, we are getting the less of these two numbers. And I have 120 and 236. And 120 is the one that will be capitalized. Okay, the one that will be capitalized. Type. Up till now, nothing is different from the previous example. The new issue here is the interest that we have to do if I required from you to do journal entries for the whole problem. The new part here that we are going to make an entry for all the payment that have been made by the company. طيب actually the first one we said that the company paid 210,000. طيب if we referred back to the question, that we will find that the company said that we have 100,000 as a price or the cost for the land. I'm going to debit land 100,000, and I'm going to debit building or CIP. CIP is construction in process 110,000, and I'm going to credit cash with the total. In the second payment, it is building or CIP with cash. The third, the same. Fourth is the same. The only different one is the one that will be made to capitalize the part of the interest. And as we showed you in the previous slide, we selected the 120,000. So I'm going to debit building or capitalized interest for 120,228. I'm going to credit cash with the total interest to be paid, which is 239,500, and the difference will be considered as an interest expense 119,272. This is the entry if I asked you to prepare entry for that. The last thing to be shown is how we are going to present that in the financial statement. Actually, if we are talking about the income statement, you will find that under other income or expenses, we are going to say the interest expenses 239,500 minus the capitalized interest 120,228. So the net is 119,272. This part, okay, of the interest that will be deducted in the interest rate, the income statement, is the 119. And we have to have note to explain under accounting policies, explaining how did we reach for the 119. فبقول capitalized interest during 2011 total interest was 239,500, of which 120 was capitalized and 119 was charged to expenses, and the capitalization rate used is 11.04. This is note for what have been included in the statement. By that, we ended IAS 23, the borrowing cost. Okay, and next time inshallah we are going to start the IAS related to the impairment inshallah.